Let's turn our focus now to the markets, where the rand continues to trade erratically against the US dollar today. But for a look at how the markets are performing so far, at least in greater detail, we're joined now by Mr. Mbuso Zulu, Senior Equity Analyst at Sentio Capital. Mbuso Zulu, thank you very much for your time today. Sorry, Mr. Zulu, for that. Thank you very much for your time. Perhaps if you could start by giving us a sense of how the markets have opened and what exactly is driving the currency moves.
Good day, Tammy. Today it's a good day. So today the JSE is trading slightly higher, but there is a lot of red on the screen, and the sentiment is generally risk off. You've had the US GDP data that came in below what expectations were. That was on Thursday, and that sentiment has filtered through to our markets. There is, of course, the threat of tapering that still hangs in the horizon, as well as just uncertainty around how inflation is going to shape out. It seems from the central bank comments, the ECB as well as the Fed, that there is concern that it is going to be more persistent than what they had thought initially, and that is that it would be more transitory. So you are seeing that weighing on the markets, and our markets is definitely taking some weakness on that as well.
Now, gold was set for a third consecutive weekly gain today, while oil prices edged up. Talk us through those moves.
Yeah, so the gold price is definitely reflecting the inflation concerns. It is an inflation hedge, and you have seen it tick higher. And of course, with the oil price persistently above $85 per barrel is going to be a cause for concern, especially from an inflation perspective, and also just what it means longer term from a substitution effect, whether this will then accelerate the move towards renewables. So maybe oil doesn't ratchet up that much higher from current levels, but it has stayed in that $80 per barrel range.
Now, South Africa's private credit rose the most in 3 months. What is the outlook for credit extension to customers as well as corporations?
Well, the trend is positive. The 3-month trend is positive. That 1.6% increase year on year to September in private credit extension definitely bodes well as just an indication of how corporates are thinking about growth, just positive moves. Then we can infer that they are looking at investing, and that will be positive for GDP from investment perspective, as well as from consumer perspective, as this will ultimately translate to the consumer and thereby the GDP. So it's still muted, but it has been a surprise to expectations in the prior 2 readings, although this reading was expected to be slightly higher. But if it continues to trend in the way that it is trending, it should bode well for our GDP.
If you could just for a moment talk us through the Glencore third quarter 2021 production report.
Sure. So the market is reacting positively to the Glencore update, and the share price is up at 1.7% right now. So the asset, it performed generally in line with what management was expecting, and the expectation for full-year guidance remains intact. Oil is doing well, and copper and cobalt, zinc as well. These are the metals that they are invested in. That production update is quite positive.
Now, we see cement imports rocketing by 51% in the first 8 months of 2021. What exactly is influencing those price increases?
There's been a shortage in cement. A lot of it was exacerbated by the lockdown, as well as just the dynamics where now you've got locally produced cement being stipulated as what is going to be used in government contracts going forward from November. But prior to that, you've seen that there has been a demand from a building perspective. While people have been at home and working from home, a lot of building activity has taken place, and there's been an increased demand where the local factories weren't able to respond in time to the demand, and hence then you've seen that increase in the price as well as in the supply that you've seen come through.
Ms. Mbuso Zulu, thank you very much.